The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, who likes to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on today? Well, a little bit of retest, and a retest it is. Volume seems to be significantly lighter than the push downs before. That being said, we still have some decent volume. We still have some decent volume at 6.7 billion shares as we start the show. Got Tim Ord in the next segment. We'll look at, he sent me 4 fairly interesting charts, extremely interesting charts. So we will look at those with him in the next 2 segments. But that's it. A lot of retests so far, looking fairly good. I'm down a little on one position, up a little bit more on another. So I'm liking it. I'm not long the proverbial indexes. I did buy one ETF today. And I'm going to continue trying to put together a fairly decent portfolio, as I think this is probably one of the buying opportunities of my trading career. There have been others, but every 3-4 years, something comes along and gives you a gift that you just, at the time, you can see it's a gift. It's tough to see everything in the rearview mirror and say, hey, I knew it all along. But this has every characteristic of the event that will end up being nothing. So kind of like it. Anyway, we're going to have low interest rates. Fed may even drop more in the next meeting. We've got everything to say that there's a fire hose of liquidity coming. And the only thing we have right now is to fear is fear itself, as they said in the Second World War. So what else do we have? And that wasn't brought to you by the coronavirus either. So what else do we have going on? Well, that's it for the moment. We'll get caught up. Got a few earnings, not much going on. Of course, one of the things that really mattered was that dollar getting fairly strong, down another 50 cents today, 96.80. And of course, gold, doing its little dance on the catwalk. It's just too sexy for the rest. But gold up 24, almost $25 at 1668.40 on my last tick here. And that's kind of wrapping it up. Let's do a little history and get ready for the rest of the shoe.
That it's all just a little bit of history repeating.
On this day in 1975, the Homebrew Computer Club holds its first meeting. Many people who played an important part in the early years of personal computing attended meetings of the Homebrew Computer Club during its history. Perhaps no meeting was more important than one that took place almost exactly 1 year after the first, and that was Steve Wozniak brought his design for what it would eventually be the Apple I computer. Of course, they got together and started making it in his parents' garage, and the rest is history, as we see on this day in 1975. Okay, what else do we have? Oh, I wanted to get my charts up, but we'll do that. Take a look. As I said yesterday, someone was wanting to buy Microsoft. Another question coming up on it. Again, you're going to have a lot of back and fill on these. I'm not going to be real excited about buying these big stocks, although you do have what would be a fairly nice hammer here with light volume if this continues the rest of the day. Most of the volume has been put in by the ETFs in high frequency trading again. Let's take a look at Apple and see what it's doing. Kind of the same looking pattern. We got back up to the gap. Everybody gapped this thing down. You got a little different candle in this one. But at the same time, yesterday you had 55 million shares. You got about 28 million shares so far with a little less than 2 hours left in the day. So it's going to be very hard to get anywhere close to these slam downs. Like on the third on Apple, you had almost 80 million shares. 28 million shares tells you that we're starting to stabilize out here. Of course, Apple, you're already in the third month. Generally, the market looks somewhere around 6 to 9 months ahead. They are going to be releasing significant new products for 5G. And if we probably talk as much about the coronavirus in September as we talk about Y2K 20 years ago, maybe one of the more interesting buys of a while. I think that there's a lot of other stocks out there that'll do better, and of course there'll be a lot of people shorting this and adding to it, but and I think there's better low-hanging fruit. But at the same time, the big guys, they know only one thing, and that's go back in the same stocks that they were into yesterday until they don't work anymore, and then they go somewhere else. Amazon, a little weaker out here, and of course people talking about maybe some of the supply chain busts in Amazon. You filled all that huge gap that was on the 31st of January on earnings. You filled it, 4 or 5 days ago. That came down on a little under 10 million shares when that gapped up on 15.5 million shares. So you're probably looking fairly good. I suspect in an election year, the thing that I worried about most already happening hasn't happened, and that is a lot of anti-trade restrictions or antitrust issues coming in. My guess now is it will be after the first of the year. In fact, I saw Barr was going to have a press conference. Was it anything is it already over? Unless he's come up with something new. But I have not seen anything. Let's see. Maybe someone can tell me. I don't see anything on the list. Maybe it was a press conference about nothing. But, somebody in the den earlier today was talking to me, one of my subscribers, about work. We have that, somebody bringing that up. And I'll get my connection fixed here. Bringing up work, which is Slack. And I'm going to say that any stock that is ripe for a buyout or a potential buyout will be the ones that are all hopping here, because no one on Wall Street likes to do anything better than go after the weakest fish in the pond that may be worth something when things are the worst. So look for potential buyouts as the biggest movers, but certainly a nice pop in this. And, you're going to give up a little bit of it. But my guess is that's just the first day of many where people are going to be pushing rumors and rumors of rumors on Slack. We'll be back after this with Tim Ord.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're going to go to Tim Ord from the ord-oracle.com. Last when we speak with Tim, he was bullish on gold and thought maybe we'd get a little slap in the face from the market. I kind of feel like maybe it's a little bit more of a gut punch, but we'll get his call on that now. How you doing today, Tim?
Good. I sent some charts over. Did you get them?
We got them, and we're showing them right now. I got chart number 1 up, which is the SPX IEF.
Right. Actually, the SPX is it's the SPX to a bond ratio is what it is, and anyhow, it's in the top window is the RSI of the SPX to the 7-10-year treasuries. So as that ratio moves up or down, the RSI will move up or down. And what's happened over this chart goes back to looks like about 2008. But when the RSI of the SPX bond ratio gets down to around 20, normally it's an intermediate term low. The reason why I started looking at these longer term charts because we had such a big gyration over the last week. We're going on 2 weeks now. And so you got to look at the bigger picture, go back to instances, what has happened in the past when these big gyrations happen. And so that's the reason why I'm kind of looking at these longer-term charts instead of a daily chart that went back a week. Here we're going back, 10 years or better. And so, anyhow, the ratio, the RSI of that ratio did get down to around 20. And the red vertical lines show when the last time those has happened. And if you notice, all of them came at some sort of a low. There was two back, or there's 2011, there was one. Market went back for a retest. The 2012 time was pretty much more or less a spike low, then went up. Then 2015, part of 2016, it flipped sideways because we had a couple of tests of that low over the next, for about 6 months. Then the December of 2018, that was a spike low, and we had a couple more back in 2019. And and now we have one. So is it going to be a spike low and we go up, or do we build a base? So that's the next question. So actually, we'll flip to, might be going too fast here, but this was quite a bit of evidence that the market has spiked at least to your midterm low. Can you flip to
Are we going to chart 2? Okay, go to chart 2. Okay.
Yeah, I've always been a big volume fan, and volume tells a lot. And this chart is a weekly chart. The reason why I'm looking at the bigger time frames, because what happened over the last week or so doesn't happen every week or every month or even every year. So you have to go back and look at other times what happened when something like this happened. And there's a lot of times that has happened. This chart goes back 2013, and I've got it circled there where it had big volume spikes. Now, this is on a weekly chart, not a daily chart. So it's pretty rare when the volume spikes that high on a weekly chart. And, it pretty much picked out the low of 2014, picked out the low pretty much in 2015. Those are huge volume spikes. The 2018 low went back for a retest. The late or December 2018, that was just a spike low, and the market went pretty much straight up. And now we got another spike. And so, to me, that's an exhaustion move to the downside. And along with the SPX bond ratio, and now you got a volume spike on the weekly charts, you pretty much spent all the energy to the downside, because everybody that wanted to get out, in my opinion, has got out.
So you're looking at those spikes as exhaustion moves.
Yeah, those spikes are exhaustion moves. Everybody hits the sell button at the same time, and and you get that much energy pushed into a short period of time. The market really dissipated all its energy, and so either it's going to flip sideways or go up. So I'm not at. I could be proven wrong here, but I think a lot of people are still waiting for the next shoe to drop, and I'm thinking all the shoes have dropped. So you're not going to, other than a retest of last Friday's low, is about the worst case scenario. So,
I remember. I remember talking to you about the S&P, and I think it's around 2003-ish when it was down like 675 or 700 or under there. And I remember you talking about although that there probably wasn't going to be a little bit of volume for a little while. If we do get some kind of V bottom out of this, do you see the same kind of thing? Everybody's not going to believe it. They're not going to believe it. They're not going to believe it. And then, of course, when it's self-evident, they'll all decide to jump back in.
Yeah, I pretty much, remember old Granville always says, climb the wall of worry. And the market needs that wall of worry to really get a rally going again. And, we got a lot of fear. If you look at the CNN fear gauge, the last time I looked at it was around 10%. In other words, 90% of the people were scared to death. The other 10% were happy. And I don't know what we're at here over the last couple of days, but that's pretty low.
Which
one
was
just another gauge of fear, but volume's a gauge of fear too. So,
which
you have a question?
Yeah, what's the? You were saying the CNN?
Yeah, CNN fear gauge.
Where's that?
Actually, just Google it. CNN bull bear gauge, I think they call it.
Okay.
It takes a survey. Actually, I can pull it up here. And actually, if you can wait a second, I got it on my. Didn't know you were going to ask me that question. I would have had it handy.
I'm sure if we talk about it, someone's going to want to look at it. And while you're looking that up, I will tell them if they email me at path@tfnn.com. That I will be glad to send all these charts that we're going to talk about here today along with it. And if I get the link, I'll send that to them too, so they can always check that out. But let me know when you get it here. I'm looking at your weekly surge volume, and it's you've got a few out here where nothing really happened on them, but the trend at least continued for the most part. So yeah, when these things happen real quickly, it seems like the light that burns twice as bright only burns half as long. So yeah, they burn out fairly quickly. We're going to go to the break here while Tim's looking for that. Again, you can email me at path@tfnn.com. If you have a question for Tim, you can call us at 877-927-6648. Be glad to send those charts out during the break too, or later on if you need to email me later. Be back in a second.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights Day, by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. We've got the chart up here that Tim was talking about. It's CNN. It's money.cnn.com. And it's Fear and Greed Index. I hadn't seen it before, so I was kind of interested.
Oh, you haven't?
Myself,
yeah, it's everybody kind of uses. I sent you over. I just emailed you the web. What you found it on your own, but
yeah.
But anyhow, it's just another tool. So, once it gets up around that 100 area, you got to be, because everybody's on one side of the fence. and that's not good. They're on the bullish side. Now they're on the bearish side. So,
yeah, that was Mark Twain's famous quote. When
that's whose?
Mark Twain. When you're on the side of you're on the side of everybody else, it's time to pause and reflect. So yeah.
Yeah.
So that was
that's
good.
Kind of like the volume thing here says the same thing. Everybody got on one side of the fence. They just dumped everything they had, evidently, because we reached, extremes that we haven't seen, for well over the last, the volume chart, the weekly volume chart, that goes back, 5-6 years. So it only happened 4 times before, and all of them are right at a low. So could this time be different? Yeah, but probably not. So, it's not saying we can't test last Friday's low. In my opinion, we probably will. But, the fear of greed is just another indicator, which doesn't swing that much. If you watch it over the weeks, it picks out the intermittent term turns, not the, it doesn't fluctuate at 10 and next week you'll see it at 90. Doesn't do that. It's a slow grind up, and we'll get it. If the market rallies from here, say if it does, maybe 6 months from now you might be up to 90, but it'll take that long to do it. So when that fear gauge gets to these extreme levels, either close to 100 or close to 0, you're looking more of an intermediate-term turn rather than a short-term turn. So,
well, I've got chart 3 up here. Do we want to go to that?
Chart 3, yep. Okay, chart 3, this is, the McCullough oscillator, and this is on a daily chart, too. The only thing I want to point out on this chart, it's pretty rare to get down to minus 400 on the McCullough oscillator. The last time that happened was back in 2000, it looks like January 2012, and it did in 2010, and it did again in 2008. And all those going back that far, it's really a significant occurrence when that happens. So over the last 10 years, it happened 3 other times. And the other 3 times, if you notice, all 3 tested their lows. Actually, the 2008 low went a little bit below, but the 2010 low built a trading range and tested that low like a couple of times. And the 2000 low, the market chopped around, it went down, and it appears to be, chart's not really good, but if you can look real hard, it looked like you did have a retest. My point about this is since the last 3 times we hit, McCullough oscillator hits around minus 400, you go back down for a retest. That's what that suggests. So that's what we may do. Doesn't change the fact that intermediate term low is forming, but instead of a V bottom, we might be looking for a retest. And whether we retest just once or twice is hard to say, but at least we're going to do it once.
So you're looking for more, even if it's over a few days, more of a V bottom than something that's like a U bottom that takes 3 months because of these high spikes.
Another thing to point out, too, to get through the last low, the volume is going to be really important. If you remember, if we test a low on lighter volume, that implies that low, the second low, which is on lighter volume, did not have enough energy to push through the first low, which now there's a retest of a previous low on lighter volume implies that a previous low is going to hold. You'll break it a little bit, but in general, it doesn't have the energy to push through it. And I always use the figure 10%. If you have 100,000 volume on the first low and you go down and test it on 90,000 shares, that low is going to hold. But if you go, say you got a million shares on the first low and you go down and test it and you only do it on 500,000 shares, that second test is a much stronger signal because the volume shrank in half, suggesting that you had half the energy on the second low to get through it. So,
I remember one of your famous sayings that stuck with me for a long time, and that is a high volume low is not a high volume low until it's been retested. Yeah,
that's actually true. It's But over the years, if you look back at 2018, you remember that December 24th low. That was a spike low, and it turned around, just made a V volume, went straight up. So, but yeah, right. Most lows, high volume lows, are tested.
Yeah, we've got one more chart in about 3 minutes. So why don't we go to chart 4 here?
Right. Chart 4 is okay. Yeah, this is going back to that 400 McCollum oscillator reading we had, and actually we were just talking about it. What I'm saying here is to get through that low we had last Friday or last week, we have to have at least equal volume to get through that low. So that test, if indeed does come, the volume will really play out here. And the point I'm trying to make here, this is the same chart of chart 2, but I drew on it some more. And what I did was, the one low back in 2015, we made a test of those lows. And if you notice, volume was a lot lighter on those tests. Same thing happened in 2018. You hit a low in 2018, early January. And you came back for that low, and you notice the volume just totally shrank. You had a V bottom in December 2018. That just went up. But McCollum oscillator on that December 2018 did not get down to minus 400. This one did. The current decline did. So I'm thinking, we're going to go test that low, but the volume will play. If the volume's less than 1.25 billion shares, comes in and say a billion shares or less, that low is going to hold, and you're probably going to go back up again. So I'm thinking we're starting to base here, and when will the test come? I don't know. I mean, I think fairly quickly. Yeah, probably if not later this month, probably sometime in April. So that's how I see it. And will we go up and break new highs? Yeah, I think we will. At least go back up and test the old highs, if not break them. So it's the big setup, I think, will come on the to me, it'd be the easy trade, I guess, would be a test of last December's or last week's Friday's low. And it'll probably be a lot of emotional down there, everybody screaming and everything, but you shut all that off and you just watch volume and price, you could end up with a decent option trade, because once they come off these lows, most of them really come off hard. I mean, it's not like you're going to stay down there. It's like a rubber band being stretched, and once it goes, there'd be a good option trade for you, Dave. So.
Okay. Well, we want to thank Tim Ord for joining us once again. You can reach him at ord-oracle.com. If you want any of the charts today, just email me at path@tfnn.com, and we'll forward them to you. Thanks again. We'll see you in a couple of weeks.
All right. Sounds good.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Well, in my opinion, we're beating out some lows here around this 3,000 mark on the S&P cash volume, and most of the stocks I'm watching retests of those lows looking fairly good. A lot of stocks moving higher, so not a bad day all around. But we'll see how this works out on the end of the day. But yeah, I don't have any. I'm not long the S&P or the Nasdaq. Not making any of those trades. I'm being very targeted in what I'm looking for. And again, almost everything I have has some ulterior motive to it, a buyout, a change in the executive staff that would cause a nice run in the stock. With everybody short, you really need some kind of catalyst to get these things going if you're going to make a lot of money. If not, they kind of go up, and everybody just shorts them and kind of heads off any kind of real rally at the pass. So they used to say in these Western movies, head them off at the pass. Well, you need a huge gap and a huge move that's basically unstoppable to get enough people off sides on the short side of the market to really make a significant money. And again, every time the market goes higher, there's going to be 15 people screaming on fire running down the streets saying that the Ebola virus just mugged them at the ATM. But it's not going to be that. I think if the market does, I think it will, when no one sees a bunch of dead in the street tomorrow or the day after, they're going to just slowly start to breathe again. And we're going to look at a lot of people in the press once again as the boy who cried wolf. But they just like to go back to them, no matter how many times they come up with a good story. But we'll see. Give me a call, 877-927-6648. Email me at path@tfnn.com. And, of course, you can always leave a message in the den. But I think we don't have much. Anyway, let's go back and look at it. 3,028. Yeah, 3,024. I blinked on the S&P, which is off 106. Dow's 26,133. Nasdaq 8743. Russell 2000 1469. And crude. Could it be that crude? Is off 2%. Well, you had a good bounce off the cost of production for a couple of days when we were talking about last Friday. And you got a nice little move off that. You've kind of pulled back, and you are now back underneath it. But, when you actually kind of bounced, at least in the OIH, off that 28th low on Friday, you had, we'll call it 22 million shares. You're only down today with about 8 million shares. So ideally, if you're looking for some kind of low in crude, not only would you like another bounce back into the trading range to say that the door is closed for lower prices, but on the OIH, you get a close back above something like 853, you're back in the ball game. Oh, boy. Which reminds me of an ad that I heard incessantly as a kid. You're back in the ball game with Apollo Hair Bond. Man, they're selling the hair things back in the 80s before there was all the other stuff. And if you stayed up late, you had to listen to that ad. And the Lone Ranger, financing innocent victims of bankruptcy and repossession. Oh, that was a horrible time around 1980. Nothing but those two ads. You either needed hair or you needed financing because you were an innocent victim of bankruptcy and repossession. Okay, what else do we have? Let's go ahead and start looking at some other stuff. Some questions coming in about the SMHs. And, you're just, again, got a little hammer out here. Question about how I put together what I hear from Tim Ord. Tim Ord has a very long-term look, and, of course, most of us can't sit through those kind of rather large pullbacks. He's fairly good at it, but most people just go outside and throw up in the bushes. So what I'm looking at is, yes, we could have a kind of nice bounce over a month or two and then pull back. I don't think we have to. And basically what he was showing there in those charts, too, was that you don't have to. You may kind of pull back like we did now, and that's it, especially since this one was so violent. But the semis, of course, made a low on the 28th with 9.7 million shares. We're back now with, a little less than an hour, a little more than an hour to go on just 4 million shares, 4.2. So we're only about halfway there. Let's say we get 6 million shares. That also compares to the almost 13 million shares down on the 25th in the SMHs. So even though we're pulling back at slight light volume, maybe you got a little bit more to go. But again, I think that a lot of these sectors, when you're in it, there are going to be enough winners and losers to kind of dampen out any real big move. And that's why I continue to be kind of focused on stocks. What do you think of gold miners? Do you think they will keep going? Generally, when gold gets moving, it continues to do well. What I dislike now is you're in this big down thrust from the 27th that had 125 million shares. You're up today on 41 million shares. So do I think it kind of plays around here for a while? I think it will, and you're going to need at least some kind of event to get the GDX back over this February 28th high. And again, it doesn't matter what in a bad market, they're selling all stocks, including gold miners. They will, if things start to improve, the gold miners will probably move with the market, and gold itself will probably not move that much. The gold miners will tend to catch up. But stocks of any kind tend to be sold in bad markets, including gold. You came off of it, maybe even a little bit better than the rest. But my guess is that the miners are going to have to consolidate at least for a little while. I wouldn't be short them. I don't see that there's a big reason to be shorting gold miners here. But we'll see. Anyway, we're going to the break. We got a little bit time to come. You got plenty of time to give me a ring at 877-927-6648. And to see what else do we have. One more question about Netflix. Man, it's hanging out here. You spiked into it today again with 6 million shares. Well, I mean, this thing really hasn't pulled back when everything else really, truly fell apart and has held up well. So, I don't know. Maybe a place to hide out. especially since it doesn't get affected much by the virus. There's a little bit of that. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. We looked at the SMHs. There's a question about Tesla. I don't know. It just seems so nutty. I don't spend a lot of time looking at it these days. You went back, you tested the gap higher from the 30th of January. That's when that thing was really telling us there was a lot going on. You pretty much got back into the candle with less than half the volume on February 19th. This came back down and tested this gap higher with 29 million shares with 24, 25. I would say that you want to see that candle of the 28th retested on Tesla. But even then, I have not changed my mind at all. This is probably eventually a $40 stock when it gets bought out by somebody. Musk got his hands caught in the cookie jar either last night or today. I can't remember when it was. But he couldn't get some chips that he needed from China to ship cars here in the United States. So he just used some old ones that had the older software in it. And now, of course, everybody is in a panic and mad at him. But you can't stay mad at him that long. Kind of like Steve Jobs. He's the guy. You can't stay mad at him. Doesn't matter what he does. But, interesting nonetheless. See if we have anything else left here in the bag of stuff. We talked about, I think, everything in here. I wanted to see if there was anything else. Electronic Arts. Yeah, got that email here. Talk about stocks that are holding up well, even in this pullback. You got a little bit maybe coming, but you only have a couple dollars lower for Electronic Arts. You know what you can do when you're playing, when you got a virus or the whole school has a virus? You can sit home and play Electronic Arts video games. That's what you can do. We'll see you here tomorrow. Same bat channel, same bat time. Remember to sell when you can and not when you have to.